Hello, I'm Mandi Feely-Swain, and this is another episode of Origination Boost podcast. Today, my guest is Trevor Carlson, and he is out in Utah. Or I'm in Idaho, so you're our neighboring state. And my husband hails from Utah. He'll say he hails from Idaho, but his family is deep roots in Utah, and so it's nice to have you on the show. I invited you as a guest to be on the show because you spoke at Mastermind, right?
I did, yes, and I'm excited to be here. I've been reading your book and I've been really enjoying it, getting to know you a little bit more from that. But yeah, it was a pleasant surprise to get your invitation to be on.
Yeah, well, I'm excited, and you serve majority of your business. You serve a audience, the baby boomers, let's say, and that is a big population with a lot of equity in their properties. How did you go down the path of I'm going to get into the HECM reverse, whatever, my dear friend Curtis, he helps folks do home loans that are reverse mortgages, and he gets after me and says, "No, it's a HECM mortgage." So he says, "That's a bad word to say reverse anymore, man. So you can't say that." I said, "Okay, okay, well, yeah, I'll try."
See, and that's funny. I actually go the opposite direction of that. But yeah, I mean, tell me what you want to hear. I can give you the long story or the short story. So.
Well, this is your time, sir. I think that people will just be interested to hear, how you got into the business, and then kind of your path that way, and then we'll get it in reverse, or if that's always been your path in the business.
Yeah, so give you just a bird's eye view of my career. Next month will be 20 years that I've been in mortgages, and so I started in 2006. And again, it's funny reading your book and going through your history of the crash and the Great Recession and that it brings up a lot of my own memories. For the first 10 years of my life or my career, I was just like everybody else. I was chasing realtors, forward business, and those kinds of things. But it's interesting. I started my career in Cedar City, Utah, which is a pretty small town. It's about 40,000 people, and my average loan amount was maybe 125,000. And I learned early on, I started with Countrywide, if anybody remembers that. I learned early on that realtors wouldn't use us. They wouldn't. And I had to stand out somehow. And the way I began having success early in my career is I became a specialist of a few products. And early on it was Utah Housing, and then it was USDA. And then that evolved as I changed companies, that evolved to VA and FHA. But what I learned is that people value specialty and specialists, and I became known when I was struggling. Otherwise, I began gaining recognition as the guy that is the master of USDA or the master of FHA or whatever it is. Fast forward a little bit in 2016, I was out running one morning, and I'm a big believer in intuition and divinity and God and those kind of things. And at the time, I was the manager of a sales division for another company, doing really well, making a couple 100,000 a year and all of that. And little voice in my head said, "Trevor, it's time for you to start a company." And I said, "No, thanks, I'm good," and just kept running. Couple weeks later, the same thing. I was out running one morning, and again, the voice said, "It's time, Trevor, start your company." And I said, "All right, I'll look into it." And you know this industry as well as I do, the amount of regulation we deal with, the governmental headaches and all that kind of stuff. I had never had any ambition of having my own company. But all the same, it just kind of came together. Took a couple of months to launch. During that time frame, likewise, I had again that thought come to me that you need to focus on reverse mortgages. And I said, okay. And up to that point, I had done two in my life. But I burned the boats, as it were. I jumped all the way in. I left my forward origination business behind, and just said, "I'm going to do this, and I'm going all in. If I'm going to do it, I'm 100%. I don't want to be half in, half out." And I got a lot of criticism from competitors and friends in the beginning because of that. But honestly, it's been the secret of my success. Just being fully dedicated to one thing, focusing on being the master of one product has really been what's created great success for me in my career. And so it's not what I recommend everybody do. It was rough. There were dark times, but for me personally, that's how I've gotten to where I am, is being all in on one thing. So
Well, a couple of things that hit with me on what you just said is one, yes, the writing about it in my book about the housing recession was that was a dark time for a lot of folks. That you said your average loan size when you started was like 125,000. I remember after the crash, I think here in Boise was like 105,000 after the crash. And I didn't watch The Big Short, the movie The Big Short, for like several years, until all the wounds had fairly the scarred over, so to speak, from that time in my life, and I could watch The Big Short without wanting to cry a lot because I think that those of us that survived that time, and it was not a lot of fun. But the other part is that I love is that you said, I need to manifest things in my life, and I think that a lot of loan officers are just kind of living day to day versus trying to manifest what they want, and maybe that's true of all many humans, right? And but then the key to that is listening when it comes to you, and you did that so beautifully by, that little that voice in the back of your head or that, you're having prayer and saying, "What do I do with my life?" And actually listening is such a key to people's success, but they sometimes ask for those things and then don't listen. And you did exactly that. You asked, you listened, and then you implemented. And I applaud you for that because, like you said, it can be a scary road. And a lot of people. You also said something that I think can really resonate is the tribe around you. Right? You had a lot of people that were in your tribe saying, "Don't do this," and you still proceeded. Um, and you said he had some dark days in that time. So mindset to me is means a lot. So in that time that was dark, how did you continue with this goal of owning your own company and serving the clients that you wanted to focus on? Because like you said, there were times that you're like, okay, this is not feeding my family, so to speak.
yeah, and again, and I always try to be somewhat careful when I give advice and when I counsel people in our industry or otherwise, because just because something works for me, I don't want to make it a guarantee that it's going to work for others. But one of my beliefs, and again, you kind of talk about this in your book, and that's why it resonates with me, is that it's like when it seems like when things are the worst, is that becomes your test, that becomes your proving ground. And one of my coaches is Tim Brahim, and I don't know, you probably run into him before, of course. He says this too. He says when times were the most difficult for him, the market was the most difficult. That's when he discovered his greatest breakthroughs, and that's been true for me as well. The past 4 years have not been fun for me, but I'm still here. You know what I mean? And like everybody with these high interest rates, it stinks, and a lot of people are throwing in the towel. But one thing that I've just tried to double down on is the idea that if you're going down a path and it seems like you're headed for a cliff, the natural tendency that most people have is you turn around, you stop, you sit down. But what I've learned is that when I face that type of a situation in my life, the best thing that I can do is start running, and it is scary. Every time I do it, it's scary. But whatever that means for you, if you're facing a cliff, you don't know how you're going to get over this goalie. Oftentimes, the best thing to do is just start running and trust that it'll work out. And to date, it's always worked out for me whenever I've done that and gone forward with that commitment that one way or another, I'm getting across this. So
Yeah, your comment resonates with me. One, I feel like the mortgage business is definitely like a marathon built on sprints. It feels like you're hustle, 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 then you get a breath and then you do it again, again, again. Sometimes you have to do it harder than you did before. But the other thing that you mentioned is that you in your business, you had complete faith that you were gonna work through that, and you went ahead and you kept showing up, and I think sometimes, like you said, people don't show up long enough to see the results of the mission that they started, and it can be hard when you're first starting this business. I know I've met lots of loan officers that give up before their greatness appears because the paycheck isn't a direct correlation with the effort being put in. And those that I see produce year after year and have long-term success are the ones that keep doing those things that maybe they don't want to do and aren't necessarily today producing results, but that's what produces results down the road. And that's what it sounds like you've done. Even you mentioned the last 4 years. Are you in a purchase in the reverse HECM space? Is that purchase, or are you helping, refinances, or both? Or and how do you go after purchases in the HECM space?
So our world is, and again, this is where I'm somewhat of a blue ocean versus what a lot of your followers will experience. I've never had tremendous success with real estate agents, and that's not to, I know most people do in our industry, and that's fantastic. For me personally, I find greater connection with people that I'm have more in common with loan officers, for example. Loan officers are one of my top referral partners, and I love that because I can serve a clientele that they don't serve. Being a little bit more clear on what I'm saying there is that a lot of my partners are financial planners, they're loan officers at banks that don't offer reverse mortgages. And so I'm going there, and that's where I'm finding my breakthroughs is I'm offering a product that their company doesn't offer. And so they're either turning people away or they're sending them to me. And that's a way that I can add value to them. And that has created a lot more satisfaction and enjoyment in my career than chasing the standard listings, new listings, and those kind of things. And so the reverse mortgage world, and if you have anyone that's listening that is curious about getting into reverse mortgages, again, you kind of have to think backwards in a lot of areas. If you're trying to build a reverse mortgage business off of purchase and real estate agents, you have to have a massive network. I'm talking hundreds of real estate agents because your average real estate agent's only going to produce maybe one deal a year. And if you want to scale and be productive, it's not going to be through real estate agents. And so for me, like I say, that's been my niche is with lenders or financial planners, they act as somewhat of a funnel for me. They have more opportunities that can be sent my way. And so to answer your question more specifically, primarily we're a refinance company. We're helping people that already own their home and they're trying to get out of a mortgage or access their equity.
Well, and as cost of living goes up, people plan for retirement, but people are living longer now. And so some areas for a lot of baby boomers, maybe their greatest asset is their home. And it does make more sense than pulling out from our long-term retirement funds and not having that mortgage payment. I think there was a lot of misnomers for consumers about that and their children and people losing their homes and all other things. And I think the government's done a nice job of putting things in place that ensure that, people don't lose their homes. That's kind of a misnomer. Um, the heirs still have an opportunity to take over the home if their parents pass away, which I think that that's kind of misnomer about reverse or HECM. What other ones can you think of that are kind of misnomers about why people wouldn't want to do that?
If you want, I mean, this may be a good opportunity to just kind of give my scripts because, again, a lot of people, you're absolutely right. There is a massive misunderstanding of reverse mortgages, even within our own community of loan officers. People just don't understand them. And so I kind of touched on this at Mastermind, but the easiest way that I found to explain a reverse mortgage is to compare it with a regular mortgage. Mechanically, they're exactly the same. You borrow money from the bank. The bank's going to charge interest based on how much you borrow. The only difference is that with a reverse mortgage, payments are deferrable. It's like a student loan, meaning that as long as the homeowner lives in the home, they pay their taxes and insurance, their interest payments are deferrable for the rest of their life. Now, the problem is the old reverse mortgage was designed with the bank in mind, and that was the issue. Is that, like you say, that was the idea is, yes, we'll do this loan for you. We'll let you have no payments for life. But when you pass away, we get everything, right? And you can see why that would be bad for the homeowner, for the bank, for the family. The new reverse mortgage is different because the way it's structured, the mortgage and the interest on the mortgage is designed to essentially grow at the same pace as standard appreciation rates. And so if the homeowner has $300,000 of equity today, 20 or 30 years from now, when they pass away, their interest has been growing, but so has their appreciation. And so they should still have roughly about $300,000 of equity left over. And that's wonderful because for the homeowner, if they ever have to sell the home, they have equity that they can cash out and buy a new home. For the family, it's wonderful because they still get a chunk of cash when mom and dad passes away. For FHA, it's wonderful because there's no more losses on these mortgages. And it's interesting, when I sit down and talk to people, almost always they have some of those misconceptions you mentioned, where the bank's going to take the home, grandma's going to get foreclosed on, the fees are too high, and admittedly, so the fees are still too high. But aside from the fees, the reverse mortgage is life changing. It really is. It's a wonderful product that really makes people live better or helps people live better in retirement.
I'm going to tell you and I do very few of them in that group of loan officers that mainly focuses on forward. But if I have a client that, they've I've been 30 years, so I have clients that come to that point in their life that are reverse heck a mortgage. That's a better situation for them. And I had a client call me and she said, Mandy, I'm concerned that I'm not going to be able to keep my home if either myself or my husband pass away. Either one of us will not be able to afford the forward mortgage, the 30-year fix that we're in. Great rate, all the fun, all the things. Well, they had a business that had horses and had the racetrack here in Idaho, and part of their income came from that specific thing. Well, obviously, they didn't know at the time that was going to happen in our state. That wasn't going to be allowed. So I'm so grateful that they made the decision early on to move towards that reverse mortgage because it, like you said, it moved that payment to being a deferred payment for them. And she called me a year and a half later, and after the racetrack had changed things, and she just said, "Thank you so much because we wouldn't have been able to keep our home had we had this event happen and had a mortgage payment on our house." And so that's my biggest success story for reverse mortgage. How about you? It's probably very rewarding for some of the clients you're able to meet with.
Absolutely. That's what I love about this mortgage is, and I kind of mentioned this in Mastermind as well, that, it's a frequent thing that I'll have hugs and tears at closing. Imagine this situation, and the statistics are startling. Social Security publishes their statistic every year, and roughly, according to them, two-thirds of all retirees rely on Social Security as their primary source of income. The average check from Social Security right now, I think, is just under, it's like $1,900 a month. And so if you go off of the basic math of that, that means that tens of millions of retirees are living on less than $3,500 a month. And that would have been great in the 80s, right? But in 2026, $3,500 a month after you pay a mortgage payment and your insurances and your gas and your utilities, you don't have money left for groceries. You know what I mean? And so for a lot of people, eliminating that $1,200 payment, that $1,500 mortgage payment is life-changing. Consolidating other debts can be life-changing. Having an emergency account where they can buy new tires or fix a broken car or whatever is life-changing, because the alternative is at age 80, you go work at Walmart, you go work at Dairy Queen, you go work at Taco Bell, and it's like, that's not an alternative. You know what I mean? And so absolutely, I love that. We've had experiences where we've literally saved people days ahead of a foreclosure sale, bankruptcies. We have, I've done 3 or 4 loans this year for people that were multimillionaires. They were probably worth $5 to $10 million, but they can see that if they use the reverse mortgage properly, it becomes the best way for them to use their assets and to live better while also leaving a better inheritance to their kids. And so again, those are just things that kind of come from doing a high volume of these loans, but it does get exciting to see somebody who's struggling from month to month benefit, but also see somebody who has no business doing this find a benefit as well.
So for those listening, I think the basic rule is if you've never done a reverse mortgage, you take the age of them and it's a percentage. It's like the older you get, the more percentage you get, right? And you brought up Social Security, and I find it fascinating because I read an article about 2033, they're going to have to restructure Social Security because initially when they put Social Security together, they planned for people to live till around 65 years old. Well, obviously fast forward and people are living a lot longer than 65 years old. Thank God, because my husband is here, right? So, but he's in that group. So that would not be good for me. So I just think that having an alternative plan, and a lot of people have equity in their homes. I think what the LTV in our country is 44% collectively or something like that. So a lot of folks that have the great equity are in that baby boomer generation. And so if you're a loan officer listening to this and you're like, wow, are there opportunities? I think there are, and there's a lot of opportunities, but I do think you are gonna have to be pretty savvy to understand, the objections that come because of the misnomers with the product. And, um, what advice do you have for some outside of, really digging in, um, advice you have for loan officers that are like, "I could do that," Mandy brings up a good point. There's 44% equity and baby boomers have a lot of it, and so I'm with Trevor. I don't jive with working with real estate agents. I wanna go and I wanna find another means. What advice do you have for them? Because I'm guessing it didn't all happen overnight.
You're absolutely right on that. I often have people ask me, "Well, what are your scripts? What do you say? How do you convince people to get around this and this and this objection?" And my best advice when I'm coaching somebody on those kinds of questions is take a step back. Don't ever sell a reverse mortgage because your clients don't fully understand it, and you might be putting them into something that's not for their best good. And so please don't ever do that. Don't ever sell a reverse mortgage. The best way to approach it is through the angle of trust. And what I mean by that is when you have a consultation with the client, and it's the same way for forwards, when you're talking with first time buyers, the same thing. It's the idea, well, tell me about you. Why, what do you know about this already and why you think it's something that might benefit your life? Tell me about your family, your kids, your heirs. Who do you want to leave your properties to, and those kind of things. What I find is that if you can get your clients talking and opening up to you, that actually creates trust within them. And one of my scripts, and I don't mean it to be a script because I mean it genuinely. But when I talk to a lot of clients, I'll say, if you were my parents, this is what I'd recommend. And like I say, that's not a line. It genuinely comes
That is
from
what you would recommend
like,
to your own parents. You're not.
mhm. Absolutely. With this demographic especially, that's where you'll find your greatest breakthroughs is if you are a consultant, an advisor to them, they can feel from your first conversation that you have their best interest at heart, they'll sell themselves. They open up and they allow you to explain the mechanics of the mortgage. And it's like I say, 99 out of 100 times when I can sit down with a client and explain the way the reverse mortgage works today, they come out of the conversation selling themselves. And that again is one of those fun experiences that I've had often over the years where either they'll come into a meeting with me or their kids will come in with them, and it feels like they're sharpening the knife under the table. They know I'm the devil and they're about to attack. But after I can get them to lower their guard and gain some trust in me, then I can explain how it works and they leave the conversation decided that this is the right thing for me, not because I've sold them, not because I've convinced them, but because they can see that it connects the dots. So,
Well, and walking alongside a financial advisor, financial planner, they know what they're getting a return on their assets, right? And so instead of using these assets that they had planned to live on to buy the home, or pay off debt or what have you. They're using the equity in a property, like you said, an appreciating asset. They're using that to live on or not pay until they die. And then over here they have an appreciating asset, right? So I think that sometimes just looking at maybe even the arbitrage on that investment, you having a financial advisor in the mix, and that's probably why you do very well, is because they can help explain that in a way that makes sense on the asset side. Would you agree?
absolutely. And that kind of brings me, that kind of circles back. As I mentioned, I've had multiple clients just this year that were multimillionaires. And so a lot of people ask the question, well, if they have plenty of money, why are they doing a reverse mortgage? And so just to kind of clarify, one of the other mm, benefits of a reverse mortgage, and again, everybody should know this already, that when you borrow money from your home, it's non-taxable. And so from a financial planner standpoint, they look at that and they say, well, this is interesting. You've got $1 million of equity here. You've got $1 million in a 401k. If we take from your 401k, you're going to pay 20 to 25% taxes. If we take from your home's equity, there's no taxes, right? And so that's one advantage for the financial planner is that, hey, I can help you use the money you have without paying more taxes. The other thing that really appeals to our financial planners and our more affluent clients is that with our clients that have the available funds, say they own their home free and clear, um, they don't need all of the money that's in there now. And so we just put it into a line of credit. And the cool thing about that line of credit is that it grows by the interest rate on the mortgage. And so imagine that they've got a $500,000 line of credit. They have a 6.5% interest rate today, which is roughly where we're at. That $500,000 is going to grow by 30, what is that, 30 something thousand dollars a year. And so their available funds are skyrocketing every year versus if they had money that they put into a CD, they might get 3%. They can't touch it for 3 years. And when they do touch it, it's taxable. And so again, for those types of clients who have plenty of money, maybe they have lots of assets, the reverse mortgage is nice because it's a higher growth rate, it's non-taxable. If they don't end up using that money, it transfers to their kids as estate anyway. But it's a much better place for them to park their money until they do need it. So
Well, I thought loan amounts on reverse mortgages were small until I went and looked at your production, and I saw that your loan amounts were very large in your world that you're living in. So that makes sense. That remind me, what are the rules? How max loan amounts? What are we living in there?
no, you're absolutely right. So just basic rule of thumb. And again, with higher interest rates like we have right now, it's a little tricky. For a 62-year-old, we can only borrow 30 to 33% of the appraised value. So again, for a 62-year-old, it may not be the right thing yet. That can go as high as 50 or 60%, depending on how old the homeowner is. Whatever their interest rate is, that's kind of what determines their percentage of what they can borrow from the home. But you're absolutely right. I mean, my average loan amount today is still probably in the $200 to $250,000 range. So we're still quite a bit lower than the forward industry. But of course, our comp levels are different. We get paid quite a bit more in the number of bips we get and that kind of stuff. So, but to answer your question, so basic people that you're looking for, the minimum age is 62 or older for an FHA loan, 55 or older for non-FHA. I usually only recommend the non-FHA if it's a very specific situation, meaning that they're only going to have the home for 4 or 5 years. They have no heirs. They have no one to leave the equity to. And I say that because the non-FHA has a really high interest rate. And so it's unlikely that equity will transfer to the estate. But with the FHA, primarily, I'm looking for 70 and older is my favorite demographic because again, that's where it tends to make the biggest impact in their life is when they've really truly exited the part of life where they're earning and making money and they need to start using their assets to live better. So equity wise, I think going back to your question, minimum age 62 or 55. Generally speaking, we look for 50 to 60% equity to start looking at a situation seriously. Credit, income, we care a lot less than the forward side of the industry. We don't care about credit scores. We care more about late payments because we need to make sure that they have a history of paying things like their taxes and insurance. Even if they have terrible credit, we can still get around it with our version of an escrow account, the Lisa, where we're putting money aside to pay the taxes and insurance for them. And so again, if their credit is atrocious, we can make it work. So
And that's different than our world that, we live on the forward side for sure. And you bring up things that because I don't live in your space every day, I forget that are available. And it's such a good reminder for loan officers that they can go and get business by hyper focusing on a product. Like you said, you were kind of the master of the USDA and first time buyers, and then you pivoted into the reverse space. And I think that that's such good advice for loan officers is a lot of times I end up with helping a client close a loan that another loan officer missed something on because I'm kind of a product geek. I like to learn things and I retain them and remember how to do those things. And so if you're listening to this and you're like me and you have a personality, you can market, you can go talk to people, but you also can remember things about loans or about product. That could be super key in helping you build your business because being an expert at something, somebody says, well, if they can't get it done, send it to Mandi. I mean, that's a compliment to me, not because we're not following the same agency guidelines, but because I have maybe a different lens to look at things. And I think that sometimes forward loan officers maybe aren't doing the best thing, putting their client that's 70 maybe into a forward mortgage, because a reverse would benefit that client more than a forward would, right? So I couldn't agree more, and I think that it's a good reminder to our loan officers, in our industry, to make sure we're doing the very best thing for our client, whether that is a reverse or a forward. So, what other advice do you have for loan officers in general? You said tell the truth, make it relatable. If you need a script, have a script. Don't make it so scripty though that it sounds salesy. You shouldn't sell loans. You should just find the product that works for customers. What other advice do you have for loan officers? All of that's super sound, I think.
Well, and to kind of expand on that, yes, use a script, but be so well scripted that it doesn't sound like a script. You know what I mean? And that's one thing that I try to do every time I do something new, whether it's prospecting or relationship building. Yes, I'll build a script, but I will just go through it so many times that it no longer sounds like a script. And so obviously that's the where you're trying to get. The other number one piece of advice that I would give somebody from my own experience is, yes, be a master. It doesn't necessarily have to be a product. Again, I want to be the very best at reverse mortgages. You may not want to pigeonhole yourself to just one product, and that's totally fine. But what are you known for is the real question. If customer service is your mastery, then be the best at it. If non QM loans is your where you want to focus, be the best at it. If realtors is your favorite place of getting leads, and just go after that. Don't chase financial planners and builders and realtors and CPAs and attorneys. Find one or two segments and become the absolute master of that portion of our industry in chasing those types of referral partners. Because I guarantee you'll be far better than, if you can really dial in on one or two things and say, I'm the best at this, you will be far more successful than saying, I can do anything and everything under the sun. And I work with everybody that's out there. You can be a jack of all trades, and I guarantee you'll be forgettable to most people. Or you can be the master of what you do, and you'll be memorable to the people you come in contact with. So that would be my top piece of advice to people.
Yeah, such good stuff. I think that, figure out your unique value proposition. And I was invited to speak at a real estate sales meeting, and they said, Mandy, do you have a unique value proposition? And then I kind of caught me on my heels. I'm like, I've been doing this a while. And I think, but it made me have to think about what is unique about my business. What do I do well that maybe differentiates me from a competitor? And I think that your advice of really mastering something and understanding it and then expanding is fine. But if you pop between, this is true of anything probably in life. I mean, if you pop between golf and skiing and surfing and this and that, you'll have said, I golf once, or I surfed once, or I skied once, whatever it is. But you're never going to be really good at it. And so I think your advice is to say, get really good at whatever you want to focus on. I think that for me in my career, and yours has been a bit different path, but I love that about the mortgage space, that we can do things very differently and both win. I found that I always wanted to have like all my buckets, but usually my business plan includes, 3 strategies, action items that are built for me with dates to accomplish those by. I might focus on maybe my builder business or my real estate business or my database or like you said, financial advisors or bank referrals from loan officers that can't do it. But you're keeping the spirit of what you wanted to accomplish. I'm sure that you have a plan every week of a non-negotiable that you do in order to win business with your financial advisors and with your, bank LOs that don't do what you do. What are some non-negotiables for you in that space?
The biggest thing, and this is something that I've had to rediscover again just over the past couple of years, because again, kind of giving a brief history of my own experience, like everybody, when rates fell during COVID, we exploded. I mean, I went from a team of 3 people to 40 something. And I mean, we were doing fantastic, and then rates shot up, and and everything turned off, and we scaled all the way back down. And during that time, we'd gotten so busy that I actually got out of origination. I was just leading my team and stopped producing myself. And so when things got cold, I had to jump back in and start producing again. And you kind of mentioned this. I can remember it was on the call or before the call. You mentioned this, that we're loan officers. We got to produce, right? And that's one thing that I know it's not for everybody. I really love the client experience, and since I've gotten back into production, I've absolutely loved being in those consultations again with my clients. Even though I still have a team that does a lot of our producing with me, I love staying connected with the people that we serve. The other thing that I would put that I've had to rediscover as I've gotten back into origination is that there for a while it was easy to get business. The phone just rang. But I've had to get back to a place of you got to prospect daily. You got to have time every day to do some prospecting, creating those new connections. And I love that phrase. And I don't know if it's Barry Habib or Tim Brahim that taught this to me, but your job as a loan officer is to talk to people who need to borrow money. And when you're not doing that, your second job is to talk to people who need to borrow money. It's as simple as that. You know what I mean? And so if you're not doing prospecting time every day, you can guarantee that you're gonna have some down months ahead of you.
I was sharing that I was a couple of minutes late to our call because I was still on the front line looking at a borrower's transaction, figuring out income and trying to figure out the best solution for their loan. And so Trevor was nice to me. He's like, I understand, he's been there, so he gets it. But for me, I think that's true. I think that, one thing I'll never give up is my ability to help home buyers because I think it keeps the humanness of the mortgage space human for me. I think you get too disconnected from the front line and how people really, how the consumers that we get are blessed to help, how they feel. Um, I think that you aren't as good at your job. And so for me, that's why I've always wanted to stay connected on the front line is because I think that makes a difference. And also, like you said, when it's raining loans, like 20 and 21, which are not gonna happen again unless, the world really takes a pivot. And dear Lord, we don't want that, friends. I know that you want to be able to trip out your front door and find a loan, but you don't want that. So we have to get used to this market that we're in. We have to kind of double down on our activities, just Trevor said it. He goes, I have to be prospecting. I either have to be talking to somebody that needs me or talking to somebody that can get me to who needs me, right? And so that in itself, every day, my husband said 5 conversations a day about loans will ensure that you have a business. And I think it could be that simple. I think it could be just that simple. Did you have 5 conversations today that will lead you to a new loan? And most loan officers, if they're really honest with themselves, they're probably not having those 5 opportunities a day. So make that your goal. Start small. And if you're just getting started, I want to have, one conversation a day about home loans with someone that actually needs my services and then grow that over time. And that's where I've seen originators really expand their, and become better in this business. How about you? You've been doing this 20 years, so you've seen the good, the bad, and you've seen what really works for people. And then you've also seen the what not works. So let's talk about some of the good habits and bad habits of originators that you've seen over the years.
I read it in your book where you're talking about when you hired your first assistant, when you first started building a team. And that again, that resonates really well for me because for most of my career, until I started my own company, and even as I had started my own company, I tried to do everything. I tried to do it all. And because it's like, I discovered that, hey, I could be a processor too. You know what I mean? Hey, I can be a marketer too. There's a book that I really love that I discovered this year, The Science of Scaling, if anyone's heard of it. It's Ben Hardy, Science of Scaling. What he talks about in there is this idea of you've got to raise your floor. On any given day, you're going to have 1,000 different things that are trying to get your attention. But if you can raise your floor, a lot of those things start to fall down below you. And if you can get to the point where you're focusing your time and your attention on just the top 2 or 3 things, that's where scalability happens. That's where you find real growth in your business. But in order to do that, you have to find a team that will support you and take so much of that off of your plate. And so, to answer your question, that's where I find a lot of people stall out, is that they're afraid to make that leap. They're afraid to hire that person or another person or another person because, hey, it's another mouth to feed. It's another 50 or $75,000 a year that are we going to produce enough? But I've never met a high producer yet who doesn't have a team behind them. And kind of going back to an earlier part of our conversation, I've never met or I've never read about anyone who's had massive success who hasn't gone through that experience of fear and doubt and even a defeat, right? Failure, where it seems like the world's falling apart. What am I going to do? Am I going to get up tomorrow and keep going? Am I going to give up? Everybody I've ever learned about, everybody I've ever talked to that has made it through the failure, they kept getting up, and that's the difference. And again, that kind of comes back to this idea is, can you push through the fear of adding another mouth to your team to be able to produce more, to be able to provide for them? And the loan officers just say no to that.
That's where I found balance in my whole life in this business. People are like me, hey, I mean, I feel like I'm working 12-hour days and my marriage is suffering, or I'm not seeing my kids, or, I feel like I'm very torn. And that's where I found balance. So you take a step back. So you're going to make less when you do bring that team member on to eventually make more, to take out some of the crazy so that you have sustainability in this business. Because trust me, burnout is a real thing. You talk to any top originator, and they'll tell you that even they have bad days, right? Even they have days that they're like, what in the biscuit am I doing in this business still, right? And they're really taking a deep breath, going, whew, okay. And they'll reset their day. And a lot of originators will say, they focus on their why. And so I always love to ask this question. And you kind of alluded to it, but what is your why? And do you feel like that's evolved for you?
Not much in terms of evolution. So I've got 6 kids. Honestly, they're my why. I love it. Honestly, if I could have 12 kids, I would. But we'll be happy with 6. So my wife, my kids, the big house, the vacations, and all of that kind of stuff. I don't care what other people see about me. I love enjoying life with the people that I love. And so really that's what it boils down to is that my oldest daughter's a senior this year, and I would love to take her to France for her senior trip. You know what I mean? Those are the kind of things that excite me is creating memories is really what drives me. Creating memories with the people that I want to create memories with.
I think that that's key. So if you're listening and you're like, I'm not sure I want to do this anymore, or days are too hard for me, they're only too hard in your brain. One, nothing is impossible. With, in my opinion, with God on your side, you keep showing up. You have the right tribe around you, and you check your mindset at the door. I think that anything can be accomplished. But the thing is, even I have a why. Trevor has his why. I think you need to dig deep, and it's got to be kind of gut wrenchingly deep. To me, success is a product of the things we do. But on the flip side of that, your why should just kind of hit you at the core of who you are, because that's what gets you through your hardest days in this business, is remembering why you show up, why you do what you do. The home buyers if you have been doing this a while, that you've been blessed to be a part of that journey to build wealth in their lives. In closing, I would just say that Trevor gave you a bunch of nuggets of advice today. If you can take one of them, whether you're forward or reverse, he gave you great nuggets of advice. If you can just take one and implement it in your business and do it your way, be authentically you. But take this hour that you listened to us driving down the road and use some nugget that you can implement in your business to win more business. And I wish you very well. Trevor, thank you for being my friend. Thank you for being a fan and reading the book. And we're still selling it for 99 cents. So if you have anybody out there listening that wants the book, and I hope we can be friends in the future. And if you ever need anything, please reach out to me. But I want to say thank you for being on Origination Boost today.
Wonderful. Thank you for having me. Real pleasure.
Much success, my friend.